consequences of A, B, or C, Nicole is always there to kind of break that down for them and just help them navigate through the waters, because tax code is not fun.
It is for me.
You are that kind of person, huh? You
Yes.
literally have a good time doing it, don't you?
I have a great time doing it, and I love breaking it down. I have a teacher's heart, and so I love teaching and educating my clients and making the best decisions.
Absolutely. And I think that's one of the things that I was really drawn to, is that you had this ability to translate it, and you literally have a very calming and centering effect. Because especially during tax season for a real estate agent, because they tell you got to put money away and all this kind of stuff. Well, the rubber meets the road when tax season's upon us, and we're in that season right now. And so as real estate agents, we can definitely kind of freak out a little bit, but when we have a trusted advisor such as yourself, man, that makes all the difference. It really does.
Thank you. I would say probably real estate agents are one of my favorite group of people to work with, because they are such a hot mess when it comes to taxes. And I love just giving them the guidelines and paving that road to success with them, and then seeing their small victories along the way and helping them get from A to B. And I have fun with that.
Well, and so for all the real estate agents that are watching this, if you don't have a tax specialist like Nicole, please reach out to her, because let me give you a real life example. For the first couple of years of my business, I was just doing this as a sole proprietor kind of thing, fingers crossed, hoping that I would have enough money come tax season to pay my bills and stuff like that. Well, I didn't know about being incorporated and all those kind of tax benefits. So I remember one year I paid almost $30,000 in taxes, and Nicole was like, "What are you doing? No, don't do that. Here, let me show you this way." And I think it literally more than cut it in half. It was phenomenal. So not just a financial blessing in my business life, but that trickles down into my family life.
Yeah.
So thank you so much for keeping more money in my pocket.
You're welcome.
You're well worth it.
Thank you.
So that's kind of my story of how I met Nicole. But how did you get into the whole tax world of things? Because that's not something you just wake up and you're like, I want to be an accountant.
No, that wasn't. Thank you. So let's go back to 2000. I got pregnant in high school, and I had my son. That was not planned at all. And I wanted to be a marine biologist. So I was going to school, San Marcos, to study marine biology or biology, and working at a gas station. And I was also a MMA fighter.
Nice. My accountant can kick your accountant's butt.
Yes. So that was a fun time, but I knew I needed a more stable job. Oh, and I was also delivering Domino's pizzas, so kind of doing it all. Wow. Single mom, slept a couple hours a day maybe if I was lucky. And I threw it out there, networking's huge. And I kept saying, I'm really looking for an office job. I'd love to be someone's secretary. In 2001, I met my partner now, then boss, Fred Karma, who's just an amazing mentor. And he took me under his wing and kind of taught me everything I know now. I was still, though, going to school for marine biology. That was my passion and love. But this it was fun, and I enjoyed learning, and I was really good at it. Meanwhile, I kept getting more and more into debt, though. I was making back then $7.25 an hour. Maybe if I had a fight come up, $3,000 for a fight, which was gold. And
that's huge.
Yeah, it was huge. But I had a BMW. I lived in a low-income apartment because I did it. I did hot mess big. Yeah. I
was gonna say low-income Section 8
yeah.
and driving the expensive car. That's awesome. What a lease for $800 a month or something?
Yeah, probably. Yeah. So and in huge student loan debt, and just did it wrong from the get-go. Mm-hmm. And I remember one day at my desk crying. Oh, actually, it was in my apartment. Someone had broken into my car again, and it was raining. And I strapped Tristan, my son, who was 3 years old, into the stroller, and I walked out to my car to go to work with Fred Karma. And my window was broken in again in my low-income apartment, and I didn't have even, all my credit cards were maxed out. I didn't even have a couple $100 to fix my window. Wow. So I walked back inside to my apartment, and I slumped down on the ground and just started crying because, I couldn't even make the minimum $25 payment on any of my credit cards. I went into work later on that day, and Fred noticed that I was distressed and asked me what was wrong, and I just couldn't hold back anymore. I told him the whole entire story of how bad I was shaped financially. He took me under his wing and showed me, let's negotiate on some of these credit cards with the interest rate. Let's bring them down. Let's let them know what you can afford. At the exact same time, I stumbled upon Dave Ramsey, Financial Peace University, and that was at Cornerstone Church, and that just gave me the tools and the roadmap to get out of debt. And I just went headstrong into it. I mean, it was top ramen. I traded my car in and got a cheaper car and paid off that loan. It was tough. No going out to dinner, no Starbucks, no nails pretty. You know, my hair grew out. I think it's like dark brown. I don't know. Yeah. So it was ugly and really hard for about 2.5 to 3 years. I forgot to say this. So how did my window get fixed? Fred went and fixed my window for me. That's the amazing mentor that Fred Karma is. And that just kind of shows that's how our business is founded, you know, with that culture.
Sense of character, about caring about people,
Definitely. So I've been there. I've been extremely poor and kind of clawed my way out of that. And I can say I'm debt-free now, retirement fully funded. And it's so amazing, that freedom, that light at the end of the tunnel, that's where my passion came from. So in 2004, I had the opportunity to go to Hawaii Pacific University. I had a scholarship there, and I was going to move to Hawaii to, make my dream come true of marine biology. Well, I found out that you live a lot on a boat, and you have to apply for grants, and there are no jobs in Hawaii. I was still going to go, though. I was going to try and figure out how to do it with my son, and I have no family, no friends over there. So Fred, at that point in time, offered me a chunk of change and partnership in 2004. And then from there, we've grown this awesome company, that partnering with the passion of getting out of debt and showing people how to live within their means and pay their taxes, but only what is legally possible, show them how to pay the least amount in taxes. Yeah. And I just love it all. I love breaking it down and teaching. So.
And that's been my entire experience with you is, I was kind of a hot mess. I remember bringing a box of receipts to you, and you're like, no, this is not how we do this. I was like, oh, I thought that's what accountants do. So I was very green when I came to you, and I still am. I still learn something from you every time, and you have just blessed me personally in my business, but then also, like I said, my family's life. So thank you so much.
Thank you.
But it's a weird thing that's going on in America and just the world is that, I call it the MTV generation, right? Because, it's all about balling and having the big fancy cars. And so I think it's seeped into regular America society, that mindset of, I have to have the Louis Vuitton purse, and not me personally, but, you got to be driving the fancy cars and the big house and all that kind of stuff. Yeah. And you think people would have learned their lesson after the whole crash of 2008, 2009 and all that kind of stuff. But what's your experience? Are people just, do they quickly forget, or was there a good impact that kind of happened out of that?
I think we quickly forgot because the debt is horrendous. The student loan debt right now is the biggest burden on people's back, and something has to be done about that. I was meeting with a client the other day who makes decent money. She has $400,000 in student loan debt. I mean, student loan debt is huge. Couple that with we are in a rat race to keep up with the Jones and look great and have the name brands, everything. So it does, people live beyond their means, not even below their means. And so what I love about when you go through Dave Ramsey, you're kind of all doing it together, the financial piece. And it's almost like a contest. Who can buy the cheapest pair of shoes? You know what I mean? Who can learn how to buy clothing that works and is cheap? Yeah. And then once you get there, once you achieve financial peace, you're out of debt and you're meeting some goals and dreams that are important to you and your family, then you can splurge. Yeah. But it should be planned and on purpose and on paper, I think. You
should live like no one else, so later on you can live like no one else. Is that how he says it?
Exactly,
okay.
Yeah.
If you don't know who we're talking about, Dave Ramsey is a very fascinating character, very wise. He teaches you about money the way that Grandma and God talks about money.
Exactly.
Is that what he said?
Yep.
Yeah. So I'm trying to think. It's been a few years since I went through the program. I should probably go through it again. I think it's a good refresher for everybody to go through. But Dave Ramsey just has that good, sound wisdom about finances, and it really makes a huge difference.
It does.
And you see so many people that are just barely holding on. And, the whole student loan debt, I agree. I see so many people, because I don't get too much into people's finances because it's more on the lender side of things.
Right.
But still, I see so many people get blown out of the water because of their student loan debt. They can't qualify for a loan. You know what I mean? Because they're just buried.
And I think as parents, we need to start thinking about that a little bit more.
Yeah.
If you have a military grant and if your kid goes to school in California and you're military, that could be for free. And I have so many parents that are like, oh, my kid wants to go to New York. They shouldn't. They shouldn't go to New York. It's free in California. Wow. Community college is a great resource for a couple years. And never, your degree says Cal State San Marcos. It doesn't say community college. So. Yeah. There's different resources and different ways to go about college. But I think as parents, we need to start thinking about that for our kids as well.
Well, I think that goes back to the whole keeping up with the Joneses. Well, my kid goes to UCLA. Well, my kid goes to US, whatever,
Right.
And I remember when I was going into college, I was about to go to Cal State Fullerton, and how proud everybody was because I was going to a good Cal State school or whatever. Yeah. And it's like I had no desire. Like, I don't think I even made it a few weeks. And I chose a different path, more of the entrepreneurial. I was selling dickweed shirts at the time, so that was kind of my backstory.
Awesome.
But, everybody has their own path, and sometimes college isn't for everybody. Right. And, I think if you have that drive, and especially with technology the way it is nowadays, and I don't want to downplay or discredit college by any means, but at the same time, I think there are so many more routes
Sure. Has to
be
be the
successful.
right fit.
Yeah, because why take on $400,000 worth of student loan debt to go get a $50,000 a year job when you graduate?
Yeah,
that doesn't make sense. So that's just my 2 cents. But,
yeah.
So a lot of people have been talking about taxes.
Yes.
Okay, we have tax crazy nation, and we live in California, some of the highest taxes. But I'm going to ask you to start deconstructing what just happened a couple weeks ago.
Yeah.
We passed it. So what does that mean for the average family here in the Temecula-Murrieta area?
Yeah, so I think for the average family, making, husband and wife working, both W-2 wage earners, making about $80,000 a year, I think it's going to be a good thing. I think they're going to see about a $1,500 less tax bill come April 15th of 2000. Most of these laws go into effect 2018, so you won't see it until next year.
Okay. So does that change the way that people file this year, or it all starts next year?
Most things start next year, yeah. Okay. So for 2018 is when this tax law went into effect, most things, and that will affect us next year when we file April 15th of 2019, our 2018 tax return.
So that's when everything takes effect.
That's when everything, yeah. But so starting January 1st, things started taking effect.
Gotcha. And so when they talk about the corporations going from 35% or whatever it was down to 21%, you were kind of saying earlier that that's more for the C corporations, not necessarily for the average Joe kind of thing.
Correct.
Has nothing to do with them.
Yes. Average Joe usually has an S corporation. I have a few S corporations, so I'm average Joe as well. Sure. The big companies, or if you have foreign investors, those are C corporations. And there's tax reasons why C corporation usually doesn't make sense for the small mom and pop shops or the real estate agents. And C corporation rates is what they're talking about. When they're talking about corporation rates, that's what they're talking about. So it doesn't apply to those who own an S corporation.
Gotcha. Okay.
There are some added benefits for S corporation. We're still trying to deconstruct that, though, because it's the most complicated part of the tax reform. Wow. So you'll have to bring me back, and I'll deconstruct some of that. But there is a benefit now for that, too.
Let me ask you, I mean, I know your company does a great job about sending out emails, and I know that you're giving us the cliff notes because the average person, when you start talking about tax law and code and stuff like that, brain's just like, okay, I don't know. But how do you learn about that stuff? Like, do they give you a big old book and say, here's the new laws, learn it? I mean, I don't envy you whatsoever. I don't know how you do it.
So I really enjoy it. And politically, we're connected as well on state levels. So we're always trying to lobby on behalf of our business owners for lower taxes. And basically, it comes out, we start reading through it, and then we start the whole entire team, and we have a team of 12. Our whole entire team starts rapidly looking for online webinars, Tomorrow, most of our company is going to Pachanga. They're having a huge tax class. So if you're at Pachanga, come by.
Awesome.
You'll see, it's probably the most boring room, but we love that. And that's how we start. And we also network with we have great CPAs also in the Valley as well. And so we'll go out to lunch and we'll pick their brain, they pick our brain. And there's more than enough business in the Valley. And so we collaborate a lot with other tax professionals as well. And so it's a combination of everything. But on average, I spend easily 200 hours in continuing education a year.
Wow.
Yeah.
Which is a write-off, right?
It sure is.
Yeah. See, I know that part because my accountant told me.
Yep.
For you.
Exactly.
Let's talk about real estate agents.
Yeah.
Just in this local area, there's almost over 5,000 real estate agents in the Temecula, Marietta area. And so the few people that are going to watch this,
I hope it's a lot of people.
I hope it's a lot of people too. But let's say they are in real estate, they've been in it for a year or two, and they've survived because real estate has an 88% failure rate within the first 2 years for real estate agents.
It's a tough business.
It
I don't
absolutely-
envy you.
Yeah, it's competitive
People
for sure.
need me and call me. People, bounce around and I want a house. I don't want a house.
Well, here's a great example though, is, a lot of people are like, well, I'll just do for sale by owner kind of thing, right? Well, that's very similar to, well, I could just do TurboTax.
Right, exactly.
Okay, yeah, you could pay the $100 or whatever, but your knowledge and what I pay you on an annual basis saves me so much more money if I was trying to do it myself. So, just like real estate, if you want to go sell your house, in the negotiations process, I know how to push certain buttons to get the homeowner more money.
Right.
Right? And that's the same process for you. It's like, those little tax laws like, oh, John, you want to write this off or do this as a deduction and stuff like that.
Right.
So I just want to make that comparison. But let's talk about the real estate agent that's made it past the 2 years. They're just, let's say they're making $100,000 a year, but they're not incorporated. Can you take us down that path of maybe some of those advantages of why they should try to get an S Corp kind of stuff?
I sure can, yeah. I hope I don't lose half the audience
Okay.
here. But
you make it exciting.
Yeah. So we'll just talk very generally. If you're making, let's say you're making net $100,000, so maybe you made $125,000, you wrote off $25,000, net of $100,000 profit, makes my math easy.
Sure.
You're going to pay roughly about $15,000 in self-employment tax.
Wow.
In addition to that, you'll also pay probably about $10,000. I call it regular tax or tax to the IRS, and you'll probably pay another $4,000 or $5,000 to California. We can help with that $15,000, that self-employment tax, by incorporating you. And so we spin it off into a corporation. Usually for real estate agents, that's an S corporation is most appropriate. And by doing that and putting you on payroll, you start paying into it slowly every couple weeks or once a month. You're paying into your regular taxes as well. And so we turn it on. We make it more turnkey for you guys. Because I do think that when it's automatic and systematized, it'll work and it will come out. But doing all of that, we can probably save you on average for someone who makes $100,000, about $11,000 after the payroll and all that stuff.
Wow. So for everyone that's like, oh, I can't afford to have an accountant and a bookkeeper kind of stuff, it's like, okay, well, that might be a cost of $1,000 or $2,000, but she can save you $11,000.
Right.
That's
Exactly.
phenomenal. That's a huge
I
savings.
hope that I'm not the cheapest. I don't claim to be the cheapest. I claim to be one of the best.
Yep.
But that the tidbits that I give you through education throughout the year and proactive tax planning, you get that 6 times my fees. Year over year over year. So I didn't just save you $11,000. I saved you $11,000 year over year over year.
And then also the opportunity cost, that $11,000 that we can reinvest back into our business for marketing to get more business kind of thing. So it just really snowballs into a positive direction. So again, folks, if you don't have a financial person in your corner, you are really losing a lot of money. So make sure if it's not Nicole, at least get somebody good. But I would highly recommend Nicole.
Definitely.
What else should we talk about? I mean,
Do you want me to pop out some of the new tax laws?
let's do it.
All right. Am I going to lose you here?
I will. Can you say something funny every 30 seconds?
I'll try, yeah. I don't know if I can make taxes funny, but okay, so some of the biggest tax law changes that came out are really going to affect people now moving forward with purchasing because of the tax write-off. It's no longer as glamorous. Before, when you purchased a home, it was a huge tax write-off and your taxes changed. So even if you maybe couldn't afford the mortgage, the tax write-off allowed you to afford that mortgage. That is changed drastically. And so how that's changed is before, there's two ways that you can take on your taxes. You can, if you're a married couple, let's say a married couple, you work for somebody else, you have a W-2, you make $100,000 a year. You can either do a standard deduction. Before this, it was $12,000, or you could itemize. And itemize means write off your mortgage interest, your property taxes, your state taxes that you pay to California, your tithing, your Salvation Army runs, donations, things like that. Whichever's greater, you take. So if you have a home at a $400,000 mortgage with property taxes, you're probably at about $27,000 to $30,000 compared to $12,000. You're going to take that $37,000, and that's going to be a large tax write-off for you. At a 30%, roughly, that's probably about another $500 of tax write-offs per month in your pocket.
Okay.
Now the new tax law, there's two things. Number one, that standard deduction went to $24,000 for a married couple. So now you're competing with $24,000. If I'm at $30,000, now I only have a $6,000 benefit. At a tax rate, that's, maybe $2,000 a year benefit, where before it was $6,000 a year. In addition to that, they've also capped what you can write off with your DMV fees, your state income taxes, and your property taxes. That cap is $10,000. A lot of people think that cap is $10,000 on property taxes. No, it's all three of those categories. So someone making $100,000 on a W-2 pays in $10,000 to California. They've already capped that, which means their property taxes and DMV fees aren't going to be a write-off anymore.
So that's not good.
So that's not good.
Okay.
That's with a primary home. So that's not good for people who are looking to buy a home for a tax write-off. A primary home. They're going to live in that home. None of this affects rental properties. So I think investors buying rental properties is going to be a big, huge shift. And I think that what you're going to find is people renting, they're going to pay a lot less in taxes now because they're going to have a greater benefit. They're going to have that $24,000 where they never had that before. They only had $12,000. And you're going to see that supply and demand, the need for renting is going to rise because not as many people are going to own a home. And so I think you guys are going to see a big shift in rental properties, investors buying rental properties.
Wow. So would you suggest it'd be a good move for someone that owns a home to go pick up a couple investment properties?
If the numbers make sense. I'm big on not leveraging assets. I don't believe in that. I believe that that's what happened in 2008 with the downfall of our housing market. But if you have enough cash on the sidelines and the numbers make sense, I think that rental properties is going to be a great investment for someone. Yeah.
So you see a lot more of the corporate investors. I mean, the people that are coming out, I remember this is kind of what shifted our market here locally was in 2010 to 12, all the people were buying and flipping houses and that kind of thing. So those kind of investors.
I think you're going to see buy and hold a lot more. And obviously the flips depend on our housing prices and what happens with that. But what I think you're going to see is rents increasing, because that's supply and demand. And so I think it might even be more expensive to rent a home than it would be to buy a home. If we fast forward in 3 years, I think we're going to see that.
Yeah, we're already getting to a point now when people come to me and they're like, and I rarely do rentals, but I'll do it if it's a past client or a family friend, that kind of stuff. But essentially, when they come to me and like, "Hey, John, I want a 4-bedroom, 3,000 square foot house, but I don't want to pay more than $1,700 in Temecula," and I'm like, "Well, if you find that, let me know."
Right.
I got
I'd
about
like
20
to pick up a couple.
Yeah. But I mean, the baseline rent in Temecula right now, even for like a small house, is pushing that $2,000 mark. So, that's why you want to talk to some financial people like Nicole or Chris Wiggins when it comes to the loan financing side of things and see what those numbers look like. Is it going to be more advantageous to buy or rent? Right. Because, there's some tax law shifts and stuff like that. But at the end of the day, people are looking at what they're paying every month. You know what I mean? Right. So, helping people kind of guide them and navigate them through that process is so important. So, contact me. I'll put you in contact with Nicole or however you want to get in contact, but make sure that you are getting sound advice because there's wisdom in a multitude of counselors. Is that right?
Yeah, definitely. Sure is.
It's from the good book there.
Let me tell you about another tax law change that affects real estate agents is now any new loans after December 15th, 2017, any new loans, you can only write off the interest up to $750,000 if it's your primary home. Again, rentals this doesn't apply to because that's more of a business. But your primary home, if you get a loan for $800,000, now you can only write off the interest up to $750,000. If before you have a home with a $1 million mortgage, you got grandfathered in. If your loan was originated before December 15th, 2017. The second big thing I think might hit our construction companies a little bit is usually when people want to remodel their kitchen or put in a pool, what do? They take out a home equity line. And you could always write off that interest up to $100,000. That totally went away. So you can no longer write off your home equity line of credit. And that's not, no one's grandfathered in. That's period. You can't write off your home equity line of credit anymore.
Wow.
Yeah, so that's going to be another, I think that's going to trickle down and maybe hurt our construction companies a little bit because a lot of people, they took that tax benefit. They thought about that. Now you can still get a home equity line and do it, but it's no longer a tax benefit. So we might see a little.
So it sounds like there's some pros and cons, some give and take on situations. So it's not like it was a total hands down win for everybody, but certain segments and certain elements are going to have good things.
Right, exactly. And for real estate agents, this affects people that owns businesses. You're no longer allowed to write off taking out a client, meals and entertainment.
Oh, that's a big one. I don't know if I like that.
I certainly don't like that. But
so should I not keep receipts for all that kind of stuff, or
not taking out clients? So you can still write off your meals if you're buying your team, your staff meals. You can still write that off. But if you're taking a client out to meal or to a baseball game or a football game, you can no longer write that off. And what I think is they started targeting what's the most abused areas, and that's a pretty abused area.
Right. This is like, how do they verify that?
Right.
I mean, they go through the footage or whatever, but so where, and let's use the real estate agents as the example, but what's the best write-off for us to get? I mean, where are the ways to?
So for real estate agents, it's going to be mileage or actual car expenses. That's your guys' number one expense. And everyone asks me which is greater, and I don't know that. You have to keep track of both of them, and then I can tell you on paper which is better by doing the math. Typically, I say if you drive a normal car, a Hummer is not a normal car. And if you're a real estate agent and driving a Hummer, I think that's ridiculous. But usually, mileage is going to be better for you. I think now it's at 54 cents a mile. Don't quote me on that. That thing changes every second. And so we really recommend downloading some sort of app. We like Mileage IQ. We think it's easy. It's like a Fitbit. It tracks all your mileage. Real estate agents are awful at tracking the mileage. Every single year, it's a very even 40,000 miles. It does not matter. That's the number I get from most of my real estate agents. I drove 40,000 miles. So track your mileage. It's the number one audited item, and it's also the number one item that's grossly underestimated or overestimated.
So audit is a big, ugly, scary word. And I don't like it.
I don't like it either.
Have you had experience with audits and stuff like that?
Yeah. So to give you an idea, our firm has about 1,200 clients. And I've been at our firm for 18 years with Fred Karma. And we've had 22 now audits. 21 of them have been no change audits, which means it's a pain in the butt for us. It's a pain in the butt for you. But we've trained our clients so well. And we've provided such education that we've walked through the audit after hours and hours. And at the end, the auditor says, very good, no change. Or, these things could be tightened up. I'm going to issue a no change.
So when I hear the word audit, and this is just my imagination, I'm assuming, but I think it's like the FBI coming in to interrogate you with like bright lights and stuff. Like what does it actually look like?
Yeah.
What actually happens during that?
So I would say 75% of the audits is a love letter from the IRS in the mail saying, please prove your mileage and please prove your charitable donations. And then it's up to you to get together your mileage log and to get together your receipts from church and Salvation Army and mail those back. Or, preferably bring that to me and hire our team to bring it all together, write a cover letter and send it in, because we can see where the pitfalls are. If you're being audited, you have to hire a professional. So most of them are mail-in audits. The 22 that I was talking about specifically were a face-to-face audit. And what that looks like is you would hire our firm. Our firm brings in the IRS agent in a very nice air-conditioned room. We're extremely nice to them and polite. We have coffee and, we're not bribing them, but we treat them very well. So you actually sit in
as a representative, so I wouldn't be there?
Exactly. We do
grilling?
not want our clients there.
Oh, okay.
Yeah.
Interesting.
And
okay.
worst case scenario, you can't find something or you messed up and overestimated mileage, you're going to pay the tax with a penalty of about 20% on that tax. So if you owed $1,000, the penalty is 20%, $200. You'd write a check for $1,200. That's it. Okay, and then my check too. My check's pretty big because audit work is hard, but it's worth the money. Tedious, and we don't enjoy it either. We're just good at it.
Yeah, and thank God for people like you. Because, geez, that just is one of the most.
The IRS is awesome to work with. They are really great people. It's the state of California. Well, maybe I shouldn't say that, but anyway, it's California won't budge, and California can get ugly. California will knock on your door. It's the IRS. The IRS is really nice to work with.
Wow. And actually, I've had some love letter experiences from the IRS. And I remember the first time I got one, I was like, and not being audited or anything like that, but just like, oh, crap. Like it sends a little chill down your spine. But once you engage them, I mean, it's just like any other organization. It's just somebody at a cubicle answering the phone, going through your file and explaining it to you. And so I found that they're actually not so scary, but...
And really, about 70% of the time, because I got an IRS letter last year, 70% of the time, the IRS is incorrect. They don't know where to look. And so it just takes us telling them where to look on the return, that it was properly claimed on this line item and why. And so that's what my letter was. They weren't looking in the right spot, so it needed an explanation, and that's it. So 70% of the time, always ask your tax professional if you get a letter from IRS or California, because 70% of the time it's wrong, and you don't have to pay it. You just have to let the IRS or California know where to look.
But the key is don't ignore them.
Don't ignore them.
They don't like that.
They don't.
They hate that. And they will come find you.
Yeah.
Yeah, good old IRS.
Yeah.
Death and taxes.
Exactly.
Well, you've been extremely informative. Is there anything else we should address? Or I think we covered some good points.
Yeah. We covered great points.
But the moral of the story is don't go at it alone. There are professionals like Nicole, Fred Karma, who's a fantastic guy. I agree with you. I've crossed paths with him a few times, and he's one of those guys that, I don't know if this is the appropriate thing to say, but he's kind of like the Yoda.
Yeah, that's a great thing to say.
He's the Yoda of taxes.
Yeah,
and so,
we call him the czar.
Yeah, he'll just come out with things like Rain Man, just like, oh, no, you want to do that?
Yep.
Oh, okay. So
I go to him too, because if I can't figure it out, Fred can.
How long's he been doing it?
Oh, man. He started the practice 26 years ago, and before that in New Jersey he was doing it. So
long time.
I think he came out of the womb doing taxes and math.
Came out with a calculator. Yeah. So, ladies and gentlemen, if you need tax advice, if you want to bounce an idea off them, they'll give you their ear for a few minutes. After that, they got to charge you. But it is worth having that conversation. So make sure you reach out to Financial Accounting Services in Temecula, California. And they're located just off of Enterprise Circle.
Yeah, Winchester Road. Basically Winchester and Jefferson.
Yeah, so nice, local, close, and they're very caring, very professional, great at what they do. So I highly recommend them. Nicole, thank you so much for your time, and thanks for saving my butt so many times.
Always. Thank you so much. I appreciate you bringing me in here. This is awesome.
Awesome. And that's it. John Butler, the ball guy in the red tie with the red tie community, because everybody with the red tie is in my community. See you on the...